outputs and stuff, right? Are they right? You know,
I'm waiting for somebody to dial in. Ted, I could hear the other. Who did this with? David. So that was fine then. So when Ted comes in, it should be fine even now.
okay.
But first briefing didn't play from the computer, so that's why
It didn't.
it plays on the remoter. But when I try to play it from Slack from the computer, I can't hear it. And everything is okay. Looks okay. So yeah.
This is plugged in like this because that's the out and
That's
in.
the only thing, yeah. He's also taking his sweet time, so I'll wait for him here.
The South African National Roads Agency, SANRAL, has spent an estimated 5.3 billion rand on trying to recover e-tolls from motorists who are unwilling to pay. This is according to the organization Undoing Tax Abuse. SANRAL's latest annual report shows the agency spent an estimated 508 million rand, on collecting e-tolls, which brought in over 660 million rand in revenue, reports My Broadband. Cash-strapped power utility Eskom has declared a dispute with 3 unions. This is after wage talks reached an impasse. The matter will now go to mediation and arbitration. Unions have been demanding wage hikes ranging from about 10% up. Eskom's final offer is a 1.5% increase on the basic salary. Eskom relies on taxpayer cash bailouts to maintain its going concern status and has clearly demonstrated these demands are unaffordable, says an Eskom spokesperson. Goldfields plans to build a solar power plant at its South Deep gold mine southwest of Johannesburg. This is to reduce exposure to national utility.
Hi, Ted. Can you hear me? I can't hear you. Oh, crash. Okay, let's do this. I don't think the issue is on your side, Ted. I'm just trying to see if I can change something here. Okay, can you hear me? Can you hear me? Come on, machine, don't do that to me. No, 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 no. Okay. Okay, I think I have to stop the YouTube recording. Can you just give me 2 seconds, please, to see if I can't? Yeah, sure. Thank you. He's there. He's speaking.
You can't hear Ted.
He can hear me clearly.
Okay. So stop.
Must I stop and start?
Yeah. Is it better now?
No. Ted, can you hear us? He can hear us, but we can't hear him.
Really?
Okay, let's do this. You saying that's the wrong one? Must it be the? I mean, it's the rotors, the pro stereo.
What happens if I can you hear
Oh,
me now?
now we can hear you.
What did you do?
Okay.
You changed it.
Yeah. Okay.
Ah,
What,
okay.
okay. Yeah.
That's way better. Okay,
I wonder
so
why I don't know why the others didn't work.
yeah, what happens is
Oh.
that we start streaming on YouTube way before we start the show. So right now, you and me are live on YouTube.
Oh, are we?
So I thought
Okay.
maybe the technical issue came there. That's why I had to
Yeah.
stop it and re-record it. But that's fine if you can hear me and then I can hear you. That's about our test. It was probably
Okay.
your cable or something.
That's strange. Okay. So
Mm.
I'll just use these then.
Yes, please.
Yeah, they probably fall out most of the time, but anyway.
But we can hear you. As long as I can hear you, that's the most important part,
Okay.
and that you can hear me. All right.
All right. So
Okay.
what
You hold
mhm.
on, let me see what time you are coming on.
6:15 or something.
There we go. There's my running order. It does say something like that. Yes. So you can leave the call now and come back 2 minutes before 6:15, a minute before, just so that
Okay.
you are logged in. Okay, if you need to grab a glass of water, whatever.
Yes.
But yeah, you will be coming into a already ongoing conversation. So Alec will let you into the studio, and then we go on.
Okay. So should I just so I'll use that same link again.
Yes, please.
Okay.
Okay,
Okay.
cool. Thank you so much.
All right,
All
Dudu.
right then.
Okay.
Bye.
Bye. Bye.
The South African National Roads Agency, SANRAL, has. Okay.
That's my cue. What's it look like now?
No, bright rock tonight.
Can you move your screen so that it gets more of the background in?
Yeah.
Or must I move the
No,
background?
no, 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 no. Do what I have to do.
Visual nice shape.
Yeah, it's very nice.
Did you have a cruise?
Meditation. I'm a meditator. I'm not a cruiser. You guys all think I'm sleeping, but I'm actually meditating. I'm a meditator. Everybody can hear what's going on here. Okay. Clive, stop making such a noise, man. I can hear you all the way in here. Okay. Yeah, I just want to check. Okay. You see, we're using the wrong one again. No, man. Okay. Yeah, I'm Stu. This thing's not these settings, man. Damn it. Okay, just have a look here quickly. Okay, so we go into settings. Look at that, it's all grayed out.
Yeah, so you try here.
Where?
So what you want to change, so you scroll over.
Okay.
That's fine. That's
Oh,
fine.
okay.
That's right.
The default.
No, you don't want to go. That's the conference. That's why we have to check it every day.
Okay,
So
okay.
the defaults to this thing.
Okay, so mic is the important one.
That's fine. That's
Okay.
the pro.
Let's bring Magnus in.
And what do you want to change?
I wanted to change the camera. Okay. So it won't while recording. I don't need it. It's fine. I can use that one, yeah. And when Justin comes in, I'll just move it across to him. Magnus!
Alexis, hoe gaan het?
Yeah, lekker man.
How things?
Have you got load shedding already? It looks like
Starting at
You're very-
6.
you're very dark, Magnus. Yeah, please.
Yeah,
Good,
starting at 6, Alec.
Starting at 6. Okay. So no load shedding yet.
Now we can talk until 6 and then I'll
Okay.
probably disappear.
Okay.
I
All
think so. I'm sure when there's load shedding, we can't talk.
Well, let's see. You know, have you not got any solar yet?
I have an
You know-
inverter, but that takes like 3-4 minutes to kick in. Let's see what happens. If I
Okay.
do come back, we'll check it. We'll test it for the first time. What do you want to talk about, Alec?
We've got some of the results from the last. Sorry, I'm very loud here. We've got some results from a company called Corion, who've actually an asset management company who've put together.
The Corion report, yeah.
Yes. I'd love to talk to you about that because it's.
Yeah, no, we get it. I've read it this morning as part of our job, so we can talk about that.
Fantastic, because we've actually got David Bacher, who's the CIO there, who is going to come on to tell us about it we talk a bit about it at 6, unfortunately 6 o'clock. But if you're
We can
still
talk.
around, be lucky there. But I
Yeah,
would
it'll
love
be
to talk
nice.
to you
You
about
know,
that.
his uncle is the cricketer, the Ali Bacher.
Is it another one of those? Okay.
Yeah,
so
they're all family. I think
Okay.
Ali is his dad or uncle, and Izzy is the other one. They're all family. Yeah.
Because we know Adam quite well through Clive. You know, Clive and Adam played cricket together, and I played golf with Adam just the other day. And he's got a nice little asset management business, very small.
No. He's a smart boy, and you know,
Very
Izzy.
smart.
Yeah. So the Bacher family is, and then of course the other brother was the broadcaster.
Yes, Paul.
No, what's his name, man? Bacher. He was at KFM.
Okay, I can't remember. Yeah, I remember.
It'll come to me now. He took over from me at 702 for a while when I left,
Okay.
and he didn't last long there because his uncle owned 702.
That's not very nice. So your uncle owns a company, so they give you the old Hevo. Yeesh. Not so good. What was his name? He was like a trader. He used to be. I remember him. Yeah. Sure. It just shows, hey, we're here today, gone tomorrow, Magnus.
People forget you in 90 days. There's a book. I've got a book. People forget you in 90 days. It's
90
scientifically proven.
Cheapers. Amazing.
Adam, not
Amazing.
Adam. Yeah. Anyway.
Stevie B.
Stevie
Bacher.
B. Stephen Bacher. Yeah. There we go.
Okay. Yeah. Brilliant. Okay. Well, we ready to go. I think it's 28. No, one more minute. So just give it one more minute and away
We
go.
talk about unemployment somewhere. If you want to ask me about unemployment, that must be a hot topic and a sad topic.
It's a hot topic. It is. And we're also going to be talking about easy equities and Mark Barnes. And then Ted Black will be on the show later. You know, he wrote that book, Who Moved My Share Price? And he's written 2 pieces which have been incredibly well read. If you think they're very focused investment pieces, one on Naspers Prosus, where he's extremely critical, and then another one on PPC, where he's even more critical. So
I read them, and I know Ted, he lives around the corner from me, and I always see him on the golf course. Yeah.
Yeah. Okay. Well, we got a lot. Does he play golf there at?
Yeah, I see him sometimes walking and playing a bit of golf all by himself. He's a bit of a loner.
Okay. Nice man, very smart guy. All right, Magnus, we're ready to go. And when are you and I going to play golf before we go?
Yeah, I haven't picked up a golf club in 10 years. But I've actually told my son I'm going to start hitting balls quite soon. Maybe in the Drakensberg we'll start hitting some balls.
Fantastic, for sure, brilliant. Okay, I'm going to hit the muting us both, and away we go.
Stand by. Business Power Hour starts in 25 seconds. $15 seconds. 10 seconds.
The BizNews Power Hour.
Welcome to the BizNews Power Hour, where we give you the rational perspective on business news that matters. Indeed. Welcome to your dose of rationality every night. Here we are at 5:30 p.m., the BizNews Power Hour. And this being Wednesday, my good friend Magnus Heystek is our co-host this evening. Mr. Load Shedding Heystek. So you're only going to be with us for half an hour, depending on whether the narrator actually does switch off the load shedding at 6 or later on, Magnus. But it's always good to see you. Are you feeling optimistic, less optimistic? We see the Rand is now getting close to 13.50. For those who look for global investments, it's got to be an opportunity now to start converting some of those rands into hard currencies.
Yeah, good afternoon, Alec. And by the way, Mr. Rater is a neighbor of mine. So I've got load shedding. He's got load shedding. So
well, that's good news. Isn't that
yes.
good? I love that idea that the top brass get exactly the same as the public. So they feel.
Indeed. But he's a hell of a nice guy. And I'm very glad he's been vindicated by the Ismail Semenya report that came out this afternoon, which said accusations of racism is absolute rubbish. So he can carry on with his work cleaning up Eskom, because I think he's got a mountain to climb. But yeah, the rand is, of course. I mean, Alec, you and I have both about 40 years of experience and history with the rand. Notoriously volatile, and it either shoots up, overshoots to the top, and overshoots to the bottom. So if you're living in South Africa, do not expect a stable currency. It's not like Europe. It's not like Japan, where a 2 or 3% movement is considered to be extremely volatile. We live with a very volatile currency, almost impossible to predict. But the biggest correlation, and I've been writing about this for years and saying this, is the commodity cycle. There's a 94% correlation factor. Commodities strong, rand strong. Commodities weak, rand weak. And we have had a very weak commodity cycle since 2011. And it looks like it's starting to turn, which is great news for South Africa. But one must not make the mistake and think this is permanent. And it's got anything to do with local economic policy decisions or political developments. Maybe 5%, but it's all to do with what's happening in the big scene out there. China, commodities, oil, watch oil, gold, and iron ore. And so far, yes, we must enjoy it. The rand is strong. And it also means that your South African assets have appreciated very substantially in dollar terms. So suddenly we're becoming a little richer, and we can afford more dollar-based assets because your property has gone up a little bit, and of course your local investment funds.
It's a little like Sasol, isn't it? When you have a look at the Sasol financial results, often people focus on management's done this or there's been that initiative that's been followed through. But actually, Sasol is a directly correlated stock to the rand oil price. If you have a look at the results, at the profits that they make, and if you see the way the rand oil price runs, Sasol just follows it. It's a bit like the rand with that correlation, as you say, to commodity prices. And we shouldn't get confused by the noise.
We shouldn't. You got to look through the noise, and I know that our local media focuses on the rand strong, rand weak, but you have to understand the bigger picture. And right now, it's a good time. There's an old economist many years ago. His surname was De Kviet, a Dutch economist, and he always said South Africa advances. Well, he said South Africa's history is full of political disasters and economic windfalls. And we have both at the same time. And he was quite right. But he said this 60 years ago, 70 years ago. And that applied to the Nats. This is applying to the current ANC mob, that we have these unbelievable economic windfalls that come our way. And we must just make sure that we benefit. But the danger, because of the uncertainty in the mining industry and the licensing, Neil Froneman saying that, we're not going to benefit as much as we should. But in the meantime, the rand is strong. Time to fill your boots if you don't have some offshore exposure. It normally is the best time when the rand is incredibly strong. It doesn't last long.
Within the whole context, I guess we also have to look for the opportunities that you have on the JSE. And one that I really like, and I'm sure you know a lot about it, is Easy Equities. Purple Capital actually is where the listing is. And we've picked up in the last couple of days, and it's funny, it hasn't been that well reported, the fact that a big chunk of the shares that are partly owned by Mark Barnes are being sold. We've got Mark joining us now on the line. Hey, Mark.
Alec, good evening. Are you well?
Yeah, man. It's always good to talk with you. Thank you for joining us here. I was just mentioning to Magnus Heystek, who's our guest co-host on Wednesdays.
Yeah, hi, Magnus. Are you well? Yeah.
Mark, long time no speak. Alec, you won't believe it, but Mark was another neighbor of mine.
Very long time.
A very long time ago.
That's true indeed, yeah.
Yeah, we've been around the block. So, Mark, I'm going through the information that was on Sense. Yeah. And if we just step back a little bit, Purple Capital owns 70% of Easy Equities, and that is really the core business. Now, you started Purple Capital, my goodness, I remember coming to your offices decades ago, it feels. And through that, you own a quite a big chunk of Purple Capital. But now we see you selling in your trust, I suppose, something up to 200 million rands worth of shares in this company to bring in a new shareholder. It really requires unpacking, not least for people like us who are shareholders in your company. We just put it into the BizNews portfolio, and I hate to see the founder, ducking away.
Well, anything but. First of all, I wasn't the founders of Purple Group. It was brought to me by Charles Savage and his team at some stage, and I became a principal investor there in what was then their company, and that was then GT247.com. And that thing has changed and morphed over the last, I guess, 15 years or so into the mix that it is today, which has as its leading star, if you like, Easy Equities, in which, as you say, we own 70%, Sanlam owns 30%. Yeah, so, I mean, Charles has established an extraordinary working relationship with John Rutherford, who's got an exceptional and successful track record in tech-driven growth businesses. Okay, and so he's been looking at us, and that's him in his capacity as the MD of Nair Capital. And he'd been looking at us, and I think he intersects with our story. He sees a growth plan that we see. I mean, Purple has now got over 1 million registered users, but we really see it still really quite at the beginning of its ambitions in terms of footprint and in terms of client base. And so we were delighted by his interest, and someone had to accommodate him coming in. And they're looking to take, as you say, up to about a 17.5% stake, which will make them a very significant shareholder. And I believe that it's absolutely in the best interest of my remaining shareholding, which will still be in BVI, in the associate where this investment is coming out of, which I'm in partnership, was always in partnership with Ronnie Labner, and now still in partnership with their family. That's going to be selling this stake, and together with what we still own in that stake and what I own outside of that associate, I still also am about the same size as these new shareholders would be. So it's not an offer for sale, Alec. It's an invitation to purchase.
Okay.
And we think they're going to change. They're going to change the pace at which we do things. They're going to, and I'm delighted by infusing that kind of nous and young, able intelligence, if you like, into the management team as a partner.
Just go back a
I'm
little.
65 now, man.
Oh, but you're a very young 65, Mark. I believe you hit the golf ball further than most 30-year-olds. So,
yeah, I just disagree with the course design. Yeah.
So does Magnus. But business venture investment. So that's a joint venture between you and the Labner family, the late Ronnie Labner.
Yeah.
Are the Labners selling out entirely then from Purple Capital?
No, we're selling proportionately. We're just selling out of the vehicle. So it's not. It just happens to be the biggest stake, and that's where we could accommodate their joining in. So yeah, we're not selling. They're not selling out completely. We may, in due course, have different ways that we want to go in the future, but right now we're still in the vehicle together, and we both have shareholdings outside of that vehicle as well.
So you're going to remain a significant investor in Purple Capital,
absolutely,
round about 17%. But so
I think they're at 17.5. I think I'm at about 15 or so.
Okay.
That's my indirect stake through BVI and the stake I hold in my other personal capacities. My indirect and direct beneficial shareholdings come to about 15% odd. So
Paul Rutherford, tell us a little about him. From his LinkedIn page, and you can learn so much about people by just going online. It says he was doing mergers and acquisitions for Naspers in Middle East Africa. What kind of work did he do there, and how did Purple get onto his screen?
Well, you perhaps better ask him that. His principal engagements were looking at the company from the outside and then engaging with the executive, as you imagine. You're right. I haven't been executive there for quite a bit of time now, particularly since I started looking into the post office. But, I think that he's got a track record and a group of investors that follow him in Nair Capital and in whatever other structures he might attract capital, which identify tech-based growing businesses. That's as best as I can describe what he does. And you could have done worse than had a trading ground in M&A at Naspers, okay? and other things in his pedigree. So I mean, I sat and had a long chat with him only a few days ago. We sat, ate some lunch, and I found an extraordinary intersection with what he feels we should be doing with our footprint and what I'd like to see happening as a significant shareholder. And I know that he has found common ground with Charles Savage, and that's probably the most important thing, and the management team there.
It's an interesting breakdown of this transaction. They might buy only 41 million shares. They could buy more than 200 million shares. Why so complex?
Well, I don't think it's that complex. I think, we have to put a line in the sand when we negotiate these deals. We say, okay, how much do you want for sure? And he wants this much for sure. And then I think he's got investors which follow him, and he would then be speaking to them and building the book and so on. I'm fairly confident that we're looking at the whole transaction. But we got to a point in the transaction where we wanted to have some certainty about the deal before it got widely spread in terms of other potential investors behind him, as it were.
Now, some of us will be a little grumpy that you're doing it at R1.10 when we've paid R1.25.
Hey, Alec,
what is the upside of bringing them in at R1.10? Because presumably they're going to make our R1.25 look cheap.
I wouldn't be bringing. When I say bringing them in, I mean I'm absolutely convinced that what they bring to the strategy and what investors they bring to the party is going to more than accommodate the small discount we had to agree to invite them in.
Okay.
I mean, it's not as if the share price of Purple has been an entirely boring and predictable progression. Okay, and so you might have phoned me about this a year ago, and we might have had a very different discussion.
Well, it would have been significantly lower then, but you also
these aren't trading things, Alec. No, this is a serious strategic partner. We're inviting Paul to join the board, and we see him as part of our future.
Who's behind him? Who does he have? You've got the Labners are your partners. Who's his partners?
I don't know. I'm not at liberty to discuss other people's partners.
But are they significant? You've had lunch with the guy. I mean, as long as you plied him with a little bit of wine, maybe he shared that.
I mean, they are.
Alec, I'm quite sure that Sanlam must be very chuffed with their investment 3 years ago at 100 million for 30%. And if I do a quick numbers, it's now valued at close to R1 billion. So it shows you that sometimes you do need that injection of outside capital from long-term investors to really unlock the business, because easy equities is really blossoming now, and so they must be very chuffed with their investment.
Yeah, I would imagine they are. But to be fair, they risk. And they were an extraordinarily valuable shareholder to us. They provided some funding. Building these platforms is an at-risk business. You invest and invest and invest and invest, and only at some point where we are now do you reach critical mass and it becomes economically self-sustainable. But we invested for years and years into the systems that are now the Easy Equities platform. And Sanlam was there as a funder, and they were much more than a funder, actually, to be honest. I mean, I know Ian Kirk well. We used to work together at Capital Alliance. He was the CEO at the time. The people that Sanlam has put on the Easy Equities board bring with them some oversight and experience and institutional mindset, if you like, which marries well with young and growing and ambitious and eager entrepreneurs. We found them to be a sobering, responsible, and reliable backers and very good partners.
What do they think about this transaction?
I haven't asked them, but I imagine they're delighted.
Mark, surely they're 30% shareholders. Wouldn't it have been just courteous to have a word with them before?
I certainly. Well, first of all, the investment is into Purple; it's not into Easy Equities.
Okay.
So that wouldn't fall part of their mandate. So this investment, but. I haven't had the discussion with them. In fact, the engagement would have happened primarily at the executive level, which is headed by Charles Savage.
I understand. It's the point is well made. They're not actually going into the underlying company, but more into your business.
So the group,
Paul being appointed to the board, is that contingent on a certain amount of investment being made?
No, I think we'd invite him to the board even if he had the 50 million investment.
Sure. So he clearly is somebody that that sits well around a fire with Charles Savage, the CEO there.
Yeah, and I think you get to a point in a business where, and let's just look at other examples. Let's look at banking. Who've been the most successful bankers? It's happened when old people, if I could include myself in that group, have stood back and allowed some new, informed, energetic blood to join in. And if you don't ever do that, you will not reach your full growth potential. I'm delighted to be infused and challenged by young, open mindsets that have got more technical knowledge than I have. And so, we've got a lot of ambitions about product set. We think that easy equities is way beyond a trading platform. It goes to replacing loyalty programs, democratizing investment, as we've talked about, property. Almost any asset, can be broken down into investable parts. And the new investment decisions are made a lot on a cell phone now.
It's been a wonderful story. Magnus, the whole fractional investment revolution that Easy has initiated for people of our pedigree or vintage. I was saying the other day that when I was a young financial journalist and wanting to make my first investment, we had to buy shares in blocks of 100 and then pay some stockbroker an exorbitant fee to effect that transaction. And you really had to hold on a long time for it. Now you can make investments in blocks of 100 Rand.
I'll tell you a story very quickly. We're having lunch with all our planners. We've got about 25 planners in our company, and they're all young, below 30, 35, all highly qualified. And we came up with the idea of having an investment competition amongst all our young guys. And I was blown away. Almost every one of them had an account at Easy Equities. And they're trading, and they're buying, and they're selling. And as Mark said, it's all on the cell phone. It's all bypassing. In those days, we had to phone our broker who put the order in. Someone would run down to the floor and try and get the stock. I mean, it's just changed so dramatically, and it will continue to change dramatically.
We had a similar conversation here at BizNews, and one of our colleagues, Nadia Swart, who was doing our market reports in the past week while Justin was away. She was the only one who didn't have an Easy Equities account. And a couple of the colleagues said to Crumbs, what's wrong with you? Why aren't you also investing in shares? So she's now bought her very first share through her Easy account. And Mark, that must warm your heart. These are real life stories everywhere.
There are lots of things you get for free on Easy. First of all, it's low cost trading, but the real thing you get for free is education.
There's the information. Yeah.
And your education, information, the ability to invest a small amount, an incremental learning curve with very little downside, with a massive upside. Okay, so we've got people there from 10 years to 90 years old that are investing for the first time. Okay, and we've asked some of them, what informs your investment decision? And the one summary I got was the best I've heard. I buy the brands I like and the places I shop. It's kind of a pretty good investment filter, that. Okay, you could have done worse than buy the brands you like and the places you shop. And in fact, if you then start looking at loyalty programs, I mean, would you not shop at the same place that you've got shares in? So why can't you, every time you walk into a retail store, I don't want to name names, and instead of getting a discount, why don't you get some shares?
Well, the top three shares so far this year is Sasol, Woolworths, and MTN, as Mark says. So buy the companies that where you spend your money. It's a very good learning curve. I've been doing it with my kids for many, many years. They understand it much better.
And then when you listen to the Power Hour, you will hear from time to time some chief executives who would impress you. I know recently we had Neil Froneman on the program, and some of our colleagues went off and bought some Sibanye shares. We had Charles and you, Mark, on the program on talking about Easy Equities. and the guys have bought Purple Capital shares. So you almost become you become a co-owner, which is what the whole idea of capitalism is about, isn't it?
Yeah, a friend of mine tells a story, and this goes back 5 years, of picking her two twin kids up at school. They were 14, I think, at the time. And she was saying, well, how was school? And she said, no, Mom, what's the oil price? Okay.
Oh.
And she was like, what are you talking about, boys? You know, well, we got some Sasol shares on Easy. Okay. And so, I mean, that to me is just a wonderful, wonderful story. You know?
But now, how do you ensure that this generation who are buying shares through Easy, because it is easy, are not going to get sucked in the way that some retail investors in, say, the United States have overextended themselves? And we see it through every cycle. When you have a bull market, eventually somebody gets hurt because they overgear or invest too much, etc. How do you I mean, has that occupied your mind at Easy? Because clearly you're looking to the next this generation who are investing to stay with you for decades.
Yeah, I don't think there's any immunity to crowd enthusiasm. Okay, but it's a two-edged discussion, because collective investment, participative, broadly based ownership, and all of these things have as many virtues as they may have vices. You're never going to find an absolute cure for someone going into too much, but they've got to fund their accounts. They've got to have the money. I mean, there's no leverage in Easy Equities. There's no, so you're betting what you've got, if you want to call it a bet. You're investing your own money, and it's not that the real challenge in these what I might call these investing fests is leverage. Okay, is doubling and tripling and quadrupling your money up and borrowing to buy more and having a tiny piece on margin, all of those kinds of good things, which also have their place in a trading environment. But you would find the traders are very different animals to investors, and we're not in Easy Equities looking at trading. And Easy doesn't take any principal risk. We're just a platform that facilitates the access at the cheapest price to bits and pieces of investment, which eventually, I can tell you this, Alec, in my experience in this country, most people have never had any assets. They've only had liabilities. And so we managed our liabilities until the residual asset was left to someone else to enjoy. And I'm not talking about the house or the whatever it is. Now you give people a chance to, in their own capacity, in their own decision-making framework, to own an asset. You'll find they look after it. And value it and treasure it and learn from it, and are much more conservative and wise than you'll give them due.
Mark, was there any debate about who would sell shares to enable the entry of Paul Rutherford and his grouping? In other words, were you the only person who was wanting to sell shares, or did you draw a short straw?
No. It wasn't that at all. And it wasn't just me. I'm not alone in the BVI structure. We have advisors and we have other investors. And, I think it's the only place where you could go to where you'd get a big enough piece, to be honest, without going and making an open market in the, an open offer in the marketplace, and without gathering too many people and having, and also, to be honest, I'm a principal in Purple. Side by side with management, and Charles flies the airplane, but I'm still in the cockpit a bit. Okay. Mm-hmm. And so I would have thought it would be clear that that's the place you'd want to look to partner with. This is not a sale. I mean, it's technically a sale, but it's also a purchase. And I definitely see it as a purchase, and I actually see it as adding value to my remaining shareholding.
Mark Barnes, the co-founder of Purple Capital and former chairman of Easy Equities. Magnus Heystek has been running his eye over this company. We did add it into the BizNews portfolio, Magnus, over the past 2 months. I think the first tranche was at 123 or 125 cents, and then 127 cents. So Paul Rutherford and co are coming in at a pretty useful discount, because at those levels, I thought it was excellent value. Obviously, otherwise we wouldn't have put it in our portfolio.
I think it's a company that can go very far, especially with tech moving into financial world, aligned to the sort of high cost structures of the traditional avenues, insurance companies and platforms. There is, I think, Easy Equities will disrupt certain parts of the industry, and I think you can buy some more shares, Alec, in my view.
Well, we do that every when we have a purchase, we spread it over 3 months to try and take the price out of it once we've made that decision. And I know you're going to be running away in a minute because of load shedding, or maybe not.
I'll stick around as long as I can. I have an inverter. I don't. It'll kick in hopefully within a minute or so, but otherwise we carry on. We are better einders, Alec.
Sonst nie. Ja. And you've got David Bacher in our virtual studio. David, Magnus and I were talking about your family connection. You guys are all seemingly in the financial world. Which side are you from, Izzy or Ali Bacher?
Ali is my father.
So
Yeah.
Adam is your cousin.
Adam is my cousin. So the first 20 years of my life, I was Ali's son, and then the next 15, I'm my cousin, Adam's brother. But hopefully, I'm starting to get a bit of my own identity.
Actually, now that I see you on the screen, I can see Ali, a young Ali Bacher. In how is your dad? How's he doing? Many people would know him, obviously, from his cricketing prowess.
Yeah, he's doing well. He's I think he's got 2 loves, my father, or maybe 3. He's cricket, family, and South Africa. And yeah, he's really passionate about that, continues to be, keeps himself busy by he's chairman of Right to Care, which is the biggest AIDS foundation in Southern Africa, which probably combines his passion for South Africa with his health background. So yeah, he's doing nicely, thank you.
We're going to be talking with you in a little while about the results out of the monthly report that you put together, which, Magnus, you say you studied this morning and you look at quite regularly.
I look at it all the time. We subscribe to the Corion report, and I got mine this morning and was going through the trends and the movements. You have to stay abreast of what's happening in the marketplace. But before I disappear, David, I'd like to tell you, and I'm giving away my age, I was, as a young boy at Wanderers, when your dad took that catch of Bob Cowper, 1966, I think. I was there, and I remember it happened so quickly. You only realize what a great catch it was when you saw it next day in a photograph. I think the Star took it. It was so. Yeah, there's. I'm giving away my age, but I was at Wanderers watching that game with that famous catch by your dad.
And many people think that Ali Bacher was the captain of the best ever South African cricket side, the one that gave the Aussies that 4-0 drubbing. Well, maybe.
Yeah, it was 65. That's correct. That was the 4-0 drubbing. Yes.
Yeah, wonderful to reminisce about that, and I'm sure there are many people who are listening who feel exactly the same way that Magnus does about your father. But David's going to be talking to us not about cricket, about something completely different. But it is now the top of the hour, and that means it's time for us to get up to date with the news. And here's our editor-at-large, Jackie Cameron, with a flash briefing.
The South African National Roads Agency, SANRAL, has spent an estimated 5.3 billion rand on trying to recover e-tolls from motorists who are unwilling to pay. This is according to the organization Undoing Tax Abuse. SANRAL's latest annual report shows the agency spent an estimated 508 million rand on collecting e-tolls, which brought in over 660 million rand in revenue, reports My Broadband. Cash-strapped power utility Eskom has declared a dispute with 3 unions. This is after wage talks reached an impasse. The matter will now go to mediation and arbitration. Unions have been demanding wage hikes ranging from about 10% up. Eskom's final offer is a 1.5% increase on the basic salary. Eskom relies on taxpayer cash bailouts to maintain its going concern status and has clearly demonstrated these demands are unaffordable, says an Eskom spokesperson. Goldfields plans to build a solar power plant at its South Deep gold mine southwest of Johannesburg. This is to reduce exposure to national utility Eskom, improve reliability, and lower costs. Martin Preece, Executive Vice President for South Africa, told the Africa Report that the project will make Goldfields the first mining company in South Africa to build, own, and operate its own solar plant on such a large scale. The project, planned to be operated, addresses the opportunity cost of lost production during frequent power cuts, he says. Shoprite Holdings, Africa's largest food retailer, has sold its Nigerian operations to local investors 16 years after it opened its first outlet in the continent's most populous country. Shoprite is changing its strategy from an ownership model to a franchise model. Woolworths, Truworths, and Mr. Price have also quit Nigeria. That was your BizNews Flash Briefing. For more on those and the other big stories of the day, visit biznewsradio.com.
You're listening to the BizNews Power Hour, brought to you by the team at biznews.com. Well, thank you, Jackie. And again, as per always, now it's time for our market report.
BrightRock believes that with every change in life comes opportunity, and the markets aren't any different. The daily movement in the markets mean change for us all, sometimes small, sometimes big. This daily market report is made just for you by BrightRock, the first ever needs-meshed life insurance that changes as your life changes.
And in studio, Justin Rowe Roberts, who's now completely calmed down after his CFA exams.
Alec, I was listening intently to your and Magnus and Mark Barnes's conversation. Just one thing I picked up: if you own a company like Shoprite, why would you do your shopping at a Woolies or a Spar? You have to go to Checkers or Shoprite. I mean, you've got to put money in your own pocket. But anyway, I'll continue with the market report.
It's a pretty good. Before you do, it's a pretty good point, Magnus. If you're a shareholder in Shoprite, why would you go to Woolies?
The only reason would be of convenience if you don't have a Shoprite in your area. But if you have to choose between the two, you would automatically support. There is a linkage between the two, but it's how you. A lot of people invest that way and they shop that way.
The JSE All Share Index was flat at 69,000. Shoprite was up 2% to 159 Rand on the announcement that their Nigerian sale has been concluded. Tiger brand spin-off Oceana was up 2% on a solid set of interim results. Telecommunications provider Telkom continues its upward trajectory, up 3% to a shade below 50 Rand a share. And Iqbal-controlled AEEI was up 22.5% to 1.47 Rand on the back of a 30-cent dividend declaration, despite the company generating a headline loss. The brazen channeling of funds from the PIC's 4.3 billion Rand investment in AO is enough to make one ill. Last week, AO declared a 65-cent dividend on the back of a 30-cent headline loss. In the currency markets, the Rand was stronger against all the major currencies to 13 Rand 60 cents to the dollar, 19 Rand 28 cents to the pound, and 16 Rand 61 cents to the euro. Gold is flat at $1,903 an ounce. Brent crude is at $71 a barrel. The premier cryptocurrency is up at 520,000 Rand a Bitcoin. The Kruger Rand is slightly down on a stronger Rand at 27,000. And in the US markets, the Dow Jones Industrial Average, S&P 500, and NASDAQ are all around 1/3% up.
I see we have indeed lost Magnus to load shedding, but he used to work at the Star. He was a financial editor at the Star for quite a period. So now owned by the independent newspaper group, which those days was owned by Argus. So I guess he'd have similar sentiments to yours about what's going on in that company today. But we don't know. Hopefully things will get to a head at some point. We wanted to pick up, though, on the performance of the primarily the money funds, mutual funds, for the year to the end of May. And David Bacher is with us. How did you come across the report that Corion puts out?
I was chatting to David yesterday, and then he sent me a report in the evening. I was very impressed, sent it to you straight away. I think you were equally as impressed. I think for many people, Alec, they don't have the time in the day. They've got their day jobs, they've got their kids to look after. They don't have time to do all this research. This sort of summarizes everything in 10 pieces of paper. You can see which funds have outperformed, you can see which funds have underperformed. Same with the asset classes, local versus offshore. David, you've obviously been doing this for quite a while now. They say past performance is not a guarantee of future performance. Would you say that the winners keep winning, or is there some kind of mean reversion in this?
Well, that's a good question. I wish I had a definitive answer for that. I think it depends on the length of time, you know. So if I look back at the unit trust industry, you know, over the long term, I strongly believe that there are cycles. when I started the industry, no one wanted to be a growth manager. I was working at a large multi-manager, and on the back of Alan Gray's performance, everyone was a value manager. And growth was in the industry. And that cycle played out until 2008, and on the back of low interest rates and 10 years of stimulus, etc., and no inflation, growth and quality has completely outperformed on a massive stretch, dating back probably 10 years, probably ending September, October of last year. So, if I was going to be a mean reversionist during that long 10-year period and only invest my money in that, I think my clients be a poor person. So I do believe over the long term there are cycles, and that's what we base our investment philosophy. And you need to take a long-term view, but how it gets there can be anything from 6 months to many years.
David, why did you do this? What motivated you to put together this fantastic report, as Justin says?
So, firstly, we start with with the business of Corion, and what we try and do is make the world of investing simpler. And there are so many funds. There's over 1,600 collective investment schemes, and it was actually an interaction with a financial advisor when I went to his office about 5 years ago, and he was like highlighting all the unit trusts and trying to get a feel for the industry. And on the back of that, we thought, what, there's a need for the market to actually just highlight, the main important things in the industry. One element of it, and the other element of it is, the world's getting so much shorter in terms of what's relevant in terms of time. And try and get this report out on the second business day of the month. So the numbers only come out on the collective investment schemes at about 3 o'clock in the afternoon, and we get it out at 8. And I think the industry appreciated that because there is a lot of information. We certainly don't want people to make investment decisions out of this report. It's 1 month and 1 year. I don't think investment decisions should be made just looking at that. But you get a good feel for what's happening in the medium term and trends in the market. And as a result of that, we've been very thankful for the support. It really is, subscribers are mainly financial advisors. And I think we're close to 6,000 subscribers to the report, and it's a very focused report in terms of who subscribes. So those people following the industry, a large portion of the market, we believe, use it and will wait for it on a monthly basis.
David, if I look now at the general equity, for instance, I see Kagiso, Fairtree, Stain Capital performed exceptionally well on a rolling 12-month basis, i.e. from 31st May last year to 31st May this year. I look at, say, Oasis, 11%, when the JSE All-Share Index is up 50% over that period. For a long-only manager, that's quite pathetic. And the fund's worth 5 billion rand. Would that almost be a sign for investors to stay away? Or do you think these underperforming funds can outperform going forward?
So, Justin, I think, it's as I said earlier, it's used as a tool. I think with any information an investor receives, you've got to dig a little bit deeper. So let's start with the first funds that you highlighted. What drove their performance? And if you looked at the last 12 months, it's been a very interesting period in the market. And you could have looked like a genius or a fool quite easily. So the market did about 40%, but you had platinum, small caps doing 70 to 80%. And then you had the Rand, who a lot of people were calling for it going, 19, 20, 21, appreciating 23% odd. So, you could have only made 1 or 2 calls and got very different outcomes. Now, looking at the funds that did well, were pretty much out, with no exception. Those funds were in the resources stroke platinum shares stroke small caps. And the function of the risk they took to get that also needs to be taken into account. So a manager who's not on this list could have actually had better stock selection, but just, his mandate to his clients is that he doesn't take as much risk. And then on the other side, the funds that you mentioned that didn't do well, you also got to understand how they sold that to the client, because some of the collective investment schemes, also invest a portion of their money offshore. So with the rand appreciating 22%, delivering 11% return, you mentioned, certainly not great, but you can understand that a fund could have got there.
Yeah, David, I tend to agree. And if you have to look at a guy like Pete Viljoen at the Counterpoint Value Fund, he obviously had a great track record in terms of fund management. Over the last few years, as you say, value's been out of favor. He's underperformed as a result. Maybe 2 years ago, he was written off, and he's had an awesome comeback. And that's when you look at guys like 361 and how incredibly well and consistent they've performed, 16% per annum over a 15-year plus period. It's honestly truly incredible.
Correct. Let me start with 361. Cy Jacobs and Steve Lips. I mean, it's an incredible business. I think South Africa are lucky that we have a lot of good boutique managers that are really climbing to the next. You ask yourself, who are the next Alan Grays and Coronations and Investex? You need the incumbents to be challenged. And I think we have got a lot of success stories in the South African market. And on your second point in terms of, I mean, Counterpoint was previously RCM, and I think Pete was the biggest platinum bull in South Africa. And ultimately, he was proven right. I mean, the shares, what's happened was covered on the show quite a lot yesterday. But the problem is that he was proven right ultimately, but his clients weren't left. The majority of his clients weren't there to reap the benefits. So it's just in conclusion, you got to know why you're backing a manager, understand his rationale, and you got to stay the course. I've got a strong, and I think we should do the numbers, a strong inclination that what the fund returns are in the market and what the clients get out are two different things, because there is too much chasing the winners and disinvesting from the losers at the detriment of the end return.
David, it's interesting, and we're going to be picking up with you every month to talk about these issues. But before you go, the most interesting graphs for me were on the inflows and the outflows, because that's really what money managing is all about. Is money coming in because people think that you're doing a good job, or is money going out? And lovely to see Walter Aylett coming back in form, but not surprisingly, because his performances have been very good. So good inflows there. But outflows, Alan Gray, my goodness, they seem to have, despite all those clever adverts that they have, they seem to be going completely out of fashion if you take it on the inflows and or rather the outflows that have occurred in, for instance, the Alan Gray equity and the Alan Gray balance funds.
Yes, I mean, Alan Gray have had a lot of outflows. I think it's also important to note and the success of the report. It doesn't, when you're trying to simplify things, you also simplify and leave out other important information. It's important to realize that, like, the Alan Gray Balance Fund is the biggest collective investment scheme in the country. So they will, when you have an environment where, COVID's contraction, people drawing on savings, they will get the majority of the outflows, ceteris paribus. So there are other factors you need to take into account. Alan Gray, on the local side, I think have had a bit of a challenging 12-month period. on the offshore side, I think Orbis is really doing well. So it's a bit of a mixed bag for them as a broader house. But you know, Alan Gray have been tested over short periods of time. I don't think their performance has been terrible, but you look at that long-term track record, and you know, and you stay the journey. You know, you can't point too many fingers at Alan Gray.
They'll still be there. The many of the investors in Alan Gray Equity Fund. Just looking again at your numbers, it's a 36 billion rand fund, and it produced 33% in the past year. Not bad at all. David Bacher, I will be talking to him every month as an update. We just wanted to give you a little bit of background today on how the report is put together, but we'll be a lot more specific when we chat with him in a month's time.
Thank you.
This market report was made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes.
Thank you, Justin and David, and welcome now to Ted Black. Ted, lovely having you on the program. You have been a great favorite of the BizNews community for quite some time. When we go back a little, though, you actually wrote a book. I think that was where we first met, with Andy Andrews, who's pretty well known as well as an academic here in South Africa. He was the dean of the Wits Business School, and then went on to become equally famous internationally. Perhaps before we go into those two stories of yours, which have attracted huge amounts of interest, the one on Prosus and Naspers, and the other one on PPC, that book of yours, Who Moved My Share Price, where you introduced us to Rome, or Return on Assets Managed. What motivated you to write it in the first place?
Alec, I used to be in, I mean, I've done quite a few things in my life in the business world. And at one stage I was in the HR function. And I was in a pretty senior position, and I got some share options. I mean, in relation to today, very few, but I never realized the value of share options, and never really understood finance at all. I mean, all I've got is O-level maths, okay? And what I've found is, over the years, is what an extraordinary level of ignorance there is in most corporations about finance. And it's amazing, even to the highest levels. And you know, most operating managers really look at the income statement, and probably most of the time at gross margins or gross profits, and they barely even get to operating profit. It's sales and gross margin, and the assets are left out of the equation. And you can just see how many companies systematically wind down the sales productivity of their asset bases. They become more and more investment intensive. And what's quite interesting is Deloitte have a university in the States. I think it's Deloitte. I can't remember exactly what it's called, but they produced a thing called the Shift Index in about 2011, 2012, researched thousands of companies, and they came up and said the best measure of operating management is return on assets. They measured it as purely as profit after tax on assets as a percent. And what you find is most financial guys leave out the asset productivity side. They just measure it as profit on assets. And they showed in their research that since 1965, despite massive increase in CEO pay, there's been a steady decline in return on assets.
And that's quite appropriate to discuss at the moment, because the Wall Street Journal, our partner in America, today, this morning, published US CEO pay. And once again, it's gone up, I think, into double figures over the past year, despite COVID. But if you think of what you've just said now, and we really don't want to get into the complexities of this stuff, because you do try and simplify things, but it makes sense. If I've got an organization and I've got R1 billion worth of assets, then I should be generating a heck of a lot more profit than somebody who's got an organization of 100 million rands worth of assets. So by focusing on what resources you're using, you probably get to what Warren Buffett, and I know you're also a big Warren Buffett fan, what he says is that it's all about capital allocation. And if you've got lazy capital that isn't being properly allocated, well, you are not serving your shareholders.
Yeah, and it goes right down, Alec. I mean, even at operating level, you know, what products should we make? which products are going to turn faster than others? And I mean, there's one classic I had where it was a production plant, and they had their target was 50,000 tons a month or whatever it is. Now they hit this over a 10-year period, probably about a dozen times, and they had this target in mind, and then they couldn't, and then it was the production was declining, and the year they had the records, they made far fewer products. And when we did a Pareto analysis of the product sales, out of about 60 different product lines, 5 or 6 generated 80% of sales. And it's just
that analysis, that it's the kind of the obvious, but it isn't so obvious when you're stuck in it. We haven't got a heck of a lot of time, so I really want to spend a little bit of time on both of your articles, starting off with the second one, because there are many more shareholders in Prosus and Naspers who you've been going at them for a while now. But the graphs that you published on BizNews this week, or rather in the past week, show it very clearly that you'd put 10 cent, you take that out of the package, and this is not a well-run company.
Well, I'm not saying it's not well run. Again, it comes to capital allocation. It's an impossible task to me that Bob van Dijk's got, is how to get that discount removed, because you can see that there's some of the parts it just isn't performing. And even if you go a little bit further into, for instance, Delivery Hero, or what's that? Something, that one in Russia.
Mail.ru?
Mail.ru, or whatever it's called. They're not great performers. I mean, Delivery Hero hasn't made a profit in ever, as far as I can see. And in fact, the losses are getting bigger. The bigger they go, the bigger the losses.
And
so
this
really
return on, or the ROAM, the return on assets managed, it does point out, it waves flags very strongly. And what is interesting, just to support your view, Ted, again from the Wall Street Journal, in the past week, there's been a piece on the best food delivery companies in the world, which have grown dramatically during COVID, but still can't make money. Nobody seems to be able to make money there. And Naspers has had a huge bet in that sector. Maybe if they were looking at your numbers, they might reassess.
Could do. I mean, it's if you take Amazon, when it started, everybody said, "Oh, look, it's not profitable." And even The Economist in 2014 said, "How do you compete with a company where the shareholders don't care if it makes a profit or not?" They ignored Bezos saying right at the beginning, "I'm not interested in accounting profits. I'm only interested in cash." His cash return on assets was positive within a couple of years. And it's a cash compounding machine. I mean, within a short time, it was cash ROAM was 15%. Unbelievable. But these food companies, these food deliveries, it's I mean, I don't know. It's just beyond me. And also...
I just wanted to close off with PPC, because that's another one that's not looking too bright.
Well, yeah, it's also like Nampak. both companies steadily have wound down the asset product, increased their investment intensity, winding down the sales productivity of the asset base. High investment intensity, you counter it with asset turnover. And most operating guys, they never, ever look at that number. Never. Not even the financial guys.
Would you be a buyer of PPC shares or Prosus Naspers?
Well, I think with Tencent, it's still a great investment. There's no doubt about it. PPC, I think it's coming back slowly. You know, you can the thing is that you can when it's down and you buy a share, sure there'll be an uptick. I'm sure there'll be an uptick. But that's not really what I'm looking at with Rome. I'm looking more at what management's doing. And I see it's more of a management development approach I'm adopting, not so much for a short-term trader or so on.
But if you're a long-term investor, then you want to be sure that your managers are applying their skills to your assets, which as a co-owner of the company, even if you only got 100 Rand invested there, that they're doing it well.
Yeah, that's where Rome comes in. Yeah.
Thanks again for joining us this evening. Lovely having you on the Power Hour. I think it's a very first in all the many years, and your pieces as well, which are so appreciated by the BizNews community. And once again, thank you for sharing those with us. Well, just before we do say goodbye to you, to remind you that on the international markets today, and this is what we can look at as far as tomorrow is concerned, it's pretty much flat. The Dow Jones Industrial Average is 0.1% higher. The Nasdaq hasn't moved, and it's completely flat. And the S&P is about 1/5% higher. So very, very quiet as far as the movements are concerned. But of course, within those markets, there are big moves one way or the other. It's been a particularly good day for the Rand. Once again, the Rand is now heading towards 13.50 Rand. And on the Johannesburg Stock Exchange today, well, we had some good moves up by Telkom, which has been bouncing around all over the place. Exaro, Netcore had a 2% gain, and Sanlam 2% as well on the way down. Santam down 2%, Mediclinic easing off again, 2% alongside Netcare after those financial results last week. Well, that's it from the team here at BizNews. We look forward to being back in your company again for the Power Hour, 5:30 tomorrow, same time, same place. Until then, cheerio. You've been listening to the Power Hour, brought to you by the team at BizNews. Okay, well, just to, I think you can still hear me on YouTube. Sorry that we weren't able to do those, answer those questions, Ray and Sebi. Just to pick up on what you were saying there, fees are too high for mass adoption. Sebi, not so. The fees at Easy Equities are incredibly low, and that's the reason why you have mass adoption, 1 million accounts, as he says, that have opened. I think until they came, until Easy Equities came, if memory serves, the total number of accounts that were held by individuals in South Africa were under 200,000. Active accounts much less than that as well. And now Easy themselves alone are over 1 million. So they really are getting into the mass adoptions, and the fees are very, very low at that company. They do compare well with PSG and Standard Bank, as you make that question, but you also have to remember that there are other facilities on PSG and Standard Bank, things like you can put in stop losses, you can only buy your shares at a certain price, etc. Whereas Easy is tailored to a different market player. So, and then also they're not that much higher at Standard Bank and PSG, obviously, because the market has moved. They've adjusted their fees accordingly. So different strokes for different folks. Hope that answers your questions. Thanks again for being with us tonight. Also on the web, in our virtual studio. It's nice to see as our guests coming through there. Increasingly now we're getting them either in studio or on virtual studio, but once in a while we do still have to pick up someone on the telephone. We'll be back again tomorrow. Thanks for being with us from us here in Johannesburg. Cheers.